All right, so I'm recording this for those that couldn't make it. We were originally scheduled for last Tuesday, and being June, we had an extra Tuesday, so we pushed it to this week so we could put together a great presentation on mortgage lead gen. So thank you, everybody. If you're live with us or if you're watching this video after the fact, we're going to record it and send it out. And thank you, Will Donovan, for joining us.
Yeah, thanks for having me.
I was thinking about it. I have a little bit of a presentation here that I'll pull up, but I wanted to give you a chance first and foremost to talk a little bit about OwnUp so that we can just frame up from the outset who the audience is hearing from, who the MMBA membership is hearing from, and then we'll kind of dive in to the agenda. So why don't you give us a little bit of your intro and tell the group about OwnUp, your journey.
Yeah, well, thanks again for having me, and appreciate you guys for joining. So OwnUp, I joined OwnUp 5.5 years ago or so. At that point, we were sort of a one-trick pony. We were more or less like the outsourced consumer direct arm for lenders. So we had pricing integrations into lenders' pricing engines, OB, Mortec, whatever they were utilizing. And we had in-house home advisors who were, meeting with customers and, showcasing rates, giving them sort of like meeting them where they are. So they were either, educating them on home ownership and sort of what they qualify for. If they were
Mhm.
later in the funnel or were refinance customers, we could sort of help rate quote for them. And that was a very good business until it wasn't.
Mhm.
We would send leads to lenders, and 80% of them would fund. So
Mhm.
it was essentially like outsourcing the consumer direct arm for lenders. And at that point, our customer base was largely retail lenders trying to get into consumer direct. Um, Fast forward a couple of years, obviously COVID was great for everyone, make a lot of money. And then when rates skyrocketed and it moved from purchase or refi to purchase, our model was a little less scalable in that home
Mhm.
advisors had, 1,000 to 1,500 active pre-approvals at any given point in time.
Mhm. Mhm.
Lenders were looking for more access to consumers and not waiting to the time of transaction, which is when we used to intro them to a lender. Um,
Sure.
that old model was called sort of our lock request lead. So lenders only spoke with customers when they had already sort of pre-negotiated the loan that they wanted to move forward with. And so when rates skyrocketed, we moved to a world where we have fully digital experiences. So, long form type leads or rate tables or lender comparison tables where, you see a list of lenders with a couple bullet points about like why this lender's a good fit. Um, but we still have the concierge team or the home advisors that are triaging some segment of traffic. So, if we do 1,500 leads in a day, we'll send 300 to 400 of them to our concierge team. They sit on a
Mhm.
dialer, they engage with customers, build rapport, verify that they qualify, um, show them a couple of different lenders that they can move forward with, and
Yep.
then introduce them to that lender. So we're still sort of serving as a up funnel conversion
Mhm.
segment for lenders that don't have a strong outbound muscle. Their LOs don't sit on a dialer, but they understand that in today's world, the 100% retail LO is becoming more and more rare, and consumer direct and historically retail, I think our opinion is will sort of continue to sort of morph into sort of like a hybrid LO, whether
Mhm.
you're attaining traffic from your LinkedIn presence, which at the end of the day is just lead gen,
Mhm.
or if you're buying leads or what have you. But I think especially with some of the stuff that Rocket's doing, and with lower buying Moboto, there's a clear race to getting to consumers earlier in the funnel.
Mhm.
And lead gen is one solution to that. in terms of sort of buying leads, but LOs can and are already showing success in sort of LinkedIn efforts and what have you. So that's probably a 2 or 3 minute
great,
view
yeah.
about. Yeah.
Well, I'd like to get into a little deeper into the topics that you mentioned. So today we'll dive into, that changing LO model that you're seeing. We'll dive into the landscape of what are some of the trends you're seeing across lead gen, how OwnUp competes, what others are doing in the space. And then I want to talk as well around how you see this and how lenders making these decisions around what to buy, when to buy, how to strategize these, affecting the rest of the organization. What else does marketing need to know? What else does ops need to know? What else, how should we think about these leads as they move through the process and eventually close? So we'll get into all that today. I thought it might be fun because I do want to get back to specifically how OwnUp views the market, but I thought it might be fun before that. This seems to be like a fun exercise these days. I just did what are some of the key trends in mortgage lead generation in Chat GPT? So like testing the AI here, and it came back with five. And Will, I thought maybe if you don't mind, we could get your reaction to some of these trends. It felt to me like, and I'll start with kind of the easiest ones to dismiss, and then we can dig into like the more fundamental ones. The easiest two to kind of group together that I wanted to ask you about was this idea of video content and social influence marketing, influencer marketing, LOs as influencers, and then continuing to expand or push out sort of personalized introductions, whether it's actually them or their AI avatar or what have you. Anything there that you're seeing that you think is that truly where we're going? Is that just AI promoting itself or promoting social media because all these companies are the same companies that are building this and monetizing social? Or do you think there's something there?
Yeah, I mean, I think there's definitely something there. As it relates to sort of social, 85% of OwnUp's customer acquisition for our own traffic
Mhm.
is sort of paid media, Facebook, Google, Instagram. And then we have, a mini militia of what we typically refer to as sort of like um, middle of the road influencers who
Okay.
have financial followings. One of our previous ones was Your Rich BFF. She is an ex Wall Street professional, and she talks a lot about ways to be more effective and proactive with your finances, from things of actually investing to savings to little knickknack ways to sort of better utilize sort of like credit card
Yep.
points.
Okay.
Uh, so I think there's definitely something to more and more consumers coming from social, and I think that's one area that you know own up or not, I think LOs can utilize social to build sort of presence around specializing in something and sort of picking your pocket and talking about it. And then the other one that pops out on this list, I would say, is data analytics, and data analytics and AI is sort of like a hornet's nest because there's a lot there. But in terms of data analytics, if we sell 20 to 25,000 leads in a month, we'll get downstream reporting from credit pull to contact, credit pull. It's a purchase, pre-approval issuance rates, lock rates, and fund rates by
Hmm.
each product. So when a lead hits our system, we not only know what its propensity to convert is somewhere in our network, but lender by lender. And then if
Hmm.
everyone's paying us the same amount, if Rocket thinks it's a 9 and New American Funding thinks it's a 3, it should go to the 9,
Hmm.
both for better customer experiences and lender satisfaction, which is ultimately what pays us. Um,
Yeah, I'm gonna stop sharing for a second. Do you mind if we dig in on that? I want to know how much lenders are doing this themselves and simply reporting it back to you for that waterfall that you described versus how much they're looking to you for your subject matter expertise to help them craft some of those things. And can you talk a little bit about that partnership?
Yeah, I would say there's very few lenders that do it sophisticatedly by themselves.
Okay.
Very little of the market has forced them to do that. There's always been this sort of adversarial relationship between lead providers and lenders, and it's always like someone's in the wrong. You're either overcharging me, these leads suck, or you're converting way too high. We should be charging you more.
Right.
But if you force them to give you downstream performance data, you then create a very balanced, objective relationship with lenders where we agree on milestones and then we trade the data back and forth, and there's no gray area.
Yeah.
We're either doing what we told you we were going to do, or we're not. So I guess going back to your initial question, there's probably 3 lenders or 4 lenders that can adequately do this analysis themselves on the purchase side of the business. On the refi side, it's there's way more predictability to it, and the sort of like data loop is much faster, so it's a lot easier. But a lot of people that come to us and say like, hey, can you apply this filter to leads? Can you apply this filter to leads? Often don't align with what they convert better, and it's more
Mhm.
just a perception thing. There are very big lenders who convert 3.5 times higher to lock if you send them
Yep.
with your 350,000 or less than the opposite. And they'll also in the same sort of breath will tell you to put a minimum loan filter on
Yeah.
traffic. So it's a small pool that can do it adequately themselves, but it takes some level of trust to say, and humility, to say like, I don't really know, and I don't know you that well. So,
Yeah.
are you sure that you're going to do this for me correctly? And I think it's always the reason why you should always start small in your lead acquisition and then scale. It's a lot easier on both sides of the coin to fail small than try
Hmm.
to big swing. But yeah, data unlocks everything. You shouldn't need to wait 6 months to know if lead acquisition is doing its job for you or not, even if it
Hmm.
takes that long to convert to lock on the purchase side.
Yep.
Um, and it just comes down to trading data back and forth in a frequent enough fashion, and then you know whoever is the expert asking them to say like, am I hitting a milestone that you think is going to lead me to a cost per fund that I can tolerate on my P&L?
Right. So that's a great segue to our next kind of two related questions. I want to ask you to kind of give us a hypothetical of what starting small could look like. That's one. And then in that starting small, can you give us a sense of I I want to start moving my sales organization more towards a more dynamic LO, meaning my MLOs have always been hitting the street, they're in the community, they're getting me referrals that way, they always have. But now I recognize I need to be feeding them more to make them more dynamic and keep them active and happy across both sides of their business, the digital side and the referral side. Can you take us down the path of like what starting small could look like and what recommendations you make to lenders on how to feed LOs who are not necessarily used to getting leads that way, and then start to build that muscle over time?
Yeah. So yeah, I mean, we have people that will start as small as 2,500 bucks in a month, and then go people that spend $1 million in a month.
Mm-hmm.
Um, but starting small, I think, especially if you're not familiar with or not used to um, working sort of like online lead gen type sources, I think is the sort of like perfect plug and play for our sort of like what I call post console leads. So
Okay.
the leads that we feed to our concierge team, that they're dialing on, that they're building rapport on, that they're verifying. They've run soft credit on them. They verified DTI checks out, should be sort of like 99% proxy for AUS prove eligible
Hmm.
with an overlay of intent and the fact that we dialed on them, got them on the phone, they're a real person, yada, yada, yada. And the volume starts small because it's our most expensive lead, but it is the lead that has the least variability in terms of conversion, despite
Hmm.
who the lender is. It could be Rocket, or it could be, a broker that has two LOs working with them. And it's a lot because, within the purchase space, there's so much sort of trust that's needed, which has sort of always been why like people are like, oh, lead gen doesn't work within purchase,
Hmm.
and it's a lot harder than refi, certainly. But if you have a sort of unbiased third party sort of nuggeted between consumers and lenders, it becomes a lot more attainable because then we're the one building that rapport, building trust, educating them on like, okay, you're here in the journey. Here's your next step. Here's what you should be doing at this lender when you go there. Creates way less volatility in conversion,
Hmm.
which is typically why we'll have lenders start there. Uh,
Hmm.
and then we have other lenders that come to us and are like, we have a pretty short lease on a sort of P&L basis. I don't have a ton of money to front. Um, and then, we have accepted offer leads or signed purchase agreement leads that are essentially like refis with a shot clock that
Hmm.
typically get skimmed off the top at any lead provider because we're really like the only scale, good size scale lead provider that doesn't have a captive mortgage company. So
Hmm.
Rocket obviously acquired Redfin, Zillow obviously has Zillow Home Loans, Bankrate has Sage Home Loans,
Yep.
NerdWallet bought Next Door Lending, MRC has to feed Patio, they have to feed Neighbors Bank. They
Yep.
are all in the same shop that owns Bets United, so all their VA traffic goes there. So at any of these sources, the leads that are going to convert the highest are going to go to that captive mortgage company. It just makes economic sense.
Yep.
Uh, so 10% of our purchase traffic is signed purchase agreement leads.
Oh, okay.
You have to price pretty skinny to convert them because you're essentially just stealing someone's lunch. But for leads that we sell in June, we won't invoice until like July 8th, and then they're not
Hmm.
due. The invoice isn't due until the end of July at that
Yep.
point. So
Hmm.
anything that you've paid for within accepted offers should be more or less funded by that July invoice due date. So they effectively like pay for themselves on a P&L basis, even if the margins are skinny. It helps sort of like build up a reserve for spending more into coming months. So that's another area that we suggest. And I would say the area that you'll likely fail on the most is like the mid funnel long form
Okay.
purchase lead. That you need to be tied to a dialer. The companies that are most successful have sort of like an integrated real estate play there, where they're sort of referring those leads out to their sort of agent network and sort of like
Yeah.
commingle
So
and or what have you.
just to restate some of this, like if I'm buying those mid-funnel long form leads, it's because I actually know I can pull that in and offer a bunch of different things that that person might need at where they are, which is I'm shopping, I'm looking around, or maybe sniffing around, but I
Yeah.
don't actually have an agent. I don't actually have a plan. I'm just sort of like hoping. And then I can, if you buy that, you're competing with somebody who can come in and kind of wrap everything around that lead. Whereas those like post console leads, OwnUp's done a really large chunk of sales prep, right? Like, so we now know this is ready for a professional MLO who can take it from here and get the 1003 done pretty quickly.
Yeah. And after we push those post consult leads out, we send an intro email to the lender and the customer introducing both of them to have sort of like a warm handoff. And within that intro email, we typically provide the 1003 app link, and it gets
Mm-hmm.
a lot of conversation there. Um, and it just creates sort of like a white glove experience and feels much more of like a partnership, a referral base, as opposed to, just a lead. So I think both LOs and customers feel that sort of like sense of trust and sort of referral
So
networking.
you're setting expectations up front with the purchase client to say, we're gonna help you understand this. There's a hint, we saw in the ChatGPT list, there's a hint of that personalization, customization to a degree there. But you're also telling them, we don't know what lender you're going to end up with yet. But when you do, this is a lender that we work with. So there's an intro email, there's some context. So now the lead feels comfortable. Talk to me about what the LO sees. What kind of notes, what kind of information, like how's lead gen evolving to where the lender's now actually getting a lot more depth on the personal side of the lead as well?
Yeah, yeah. So like within the consult, like our home advisor team, once they've sort of formed the consult, they can then automate and sort of be sent a list of the all of the lenders that sort of meet that buying criteria. So they can be selling a specific lender and talking about like the exact follow-up cadence that that lender is going to take in terms of once I introduce you, you'll get a call, a text, and an email from them shortly thereafter. Do this,
Mhm.
this, and this. So there's home advisors should be setting the scene for like what a general next steps looks like, but then like what the exact next steps look like from lender A or lender B. And then in terms of like the customization that you asked about, within our payload, there are, all of the traditional data points, state, loan amount, purchase price, down payment, credit score,
Mhm.
this, and this. We also provide sort of the DTI, the confirmed credit range that they're in.
Mhm.
Um, and then there's a comments field that is more or less the qualitative
Mhm.
sort of human side of the conversation. So any little nugget of, this is something that you can sort of build rapport off of that isn't just fully transactional. Like this person A should qualify because we've done all the work, but here's something to, build rapport off of. They have 3 kids, they have a dog,
Yeah.
whatever the little thing that our salesperson bonds over typically gets passed over to them for them to have some continuation of um, sales or customer experience.
It seems to me the lead gen landscape really well. And it seems to me that this idea of, out for lack of a better way to put this, outsourcing some of the hard work up front, outsourcing certainly the SEO. I mean, your core mission originally, like doing the SEO subject matter expertise, no question. A lender doesn't necessarily want to have to know as much about Google as OwnUp knows. With this piece, this to me represents like a pretty strong evolution of what vendor partners, lead gen partners, tech partners can do for lenders. Are you seeing competitors in this space? It seems like OwnUp, for sorry the pun, owns this consult type lead. But tell me what you're seeing across. You mentioned the ones that are affiliated with lenders. There's also like Lending Tree and others like that. Are you seeing more phone calls? Are you seeing more of this like warm up or do a lot of due diligence on a lead? What are some of the trends you compete with?
Yeah, I would say there's less on the lead providers doing what we do in terms of
Yep.
utilizing a concierge team, but
Okay.
there is a growing like with all of the sort of AI hot air that's out there. There are companies that are getting better at the sort of outbound and transfer type model. So like there's a company called Sela, SELA,
Okay.
um, and they're a lot of company or a number of companies will employ them to a lead comes in, long form data lead comes in, gets sent over to a lender CRM. It is sort of co-posted to Sela. Sela's AI sort of BDRs or like
Hmm.
an LOA is dialing on them, getting them on the phone, asking sort of like general application questions, and
Okay.
then live transferring them into the lender. And then that takes the burden off of lenders from being there's good LOs don't want to be call center monkeys. Like a
Right.
seasoned fellow who knows the business inside and out, knows products left and right, doesn't want to be sitting on a dialer calling people that are going to tell them no all day.
Hmm.
Okay. Um, so like companies like that do a good job of like taking the grunt work or the sort of unsexy part of lead gen and sort of
Hmm.
customer acquisition
Yep.
and just giving them the things that they can make money off of, which is ultimately what any lender should want their LOs doing. So that's more where I see, the notion of like outsourcing outbound comes from.
Yep. Okay.
And like tree or sort of like legacy lead providers face just like any modifications that they do to their product or just cannibalize their sort of legacy. I'm going to sell you to 5 to 10 lenders and sort of call
Yep.
it. So there's a sort of innovation dilemma there. So we see less of the competition on that front.
Yeah, there's a couple other kind of dilemmas that I wanted to bring up too. And so one is around this idea of search changing as well. One of the things Google did was bought YouTube. And so I'm curious because what I've heard is YouTube is one of the largest search engines that people don't think of as a search engine, right? Like that increasingly buyers are going to be going to YouTube and getting a hybrid of education and lead gen. And you mentioned a little bit of education and how important that is in your model, but then also that means they're not going to traditional Google search bar or something like that. I'll start with that one. But it also, I guess I'll add in this too, and then we'll talk about it, which is, and then ChatGPT and Claude and Copilot and Gemini, people are using those, and those are not actually built to be search engines to find a product. Those are actually built to be like, help me understand or synthesize information, but people are using them however they're going to use them, right? The consumer's deciding what these things are, but you can't find a lender in one of those, but yet people are misunderstanding and using it that way. Can you kind of talk about how confusing it is for consumers today in your world? What are you hearing and seeing? And then do you have a sense of where it goes, not in the like distant future, but maybe in the 6 to 12 months range and how you guys are preparing for that?
Yeah, I mean, I'm a big YouTube fan, so
Okay.
start there.
Yep.
But yeah, I mean, I think like so much of the world prefers to consume video content over just like reading through a bunch of stuff, clicking on things, even like putting something into ChatGPT and getting a sort of long-winded response about like what mortgage is and like how to do it. Like no
Yeah.
one really wants to read that, in my opinion.
Yeah. Right.
Um, but they love, something in the under 10 minute that can sort of help them understand in sort of simple, sort of layman's terms, like what should I be getting from my lender, sort of thing. Like dumbing down how to read an LE, like seems
Yeah.
elementary, but like you know you post a video saying like, hey, look at your rate and then compare the summation of section A minus J, you probably get a video that performs pretty well.
Yeah.
And it's not rocket science, but like looking at the sheet, it's awful confusing. Um, in terms of like how OwnUp is handling it, like a lot of our sort of micro influencer bases will post obviously on Instagram, but then have big YouTube followings as well. And in the same way that lenders benefit from us being a third party on their behalf, we benefit from sort of influencers that have financial marketing followers
Hmm.
that see us as sort of like, hey, you should go to there to do there. So there's like
Yep.
you know, attack one following on, an influencer, then you come to us and we have our own curated network, and then
Hmm.
it's like a blender, so like I think YouTube will be a big driver of lead gen within the mortgage world. In terms of like what is the utilization for ChatGPT as it relates to mortgage search, I'm not entirely sure. I think like if I knew nothing about mortgage and I was shopping lenders, I would just get a couple of LEs and then I would dump them into ChatGPT and tell it like which one's better,
What does
and
this mean? Right. Sure.
pretty black and white answer to that. Um, if you're going purely off of rate, but yeah, I'm not can't say I've thought too much about.
No, that I think it's a growing I think it's a growing trend that I'm curious about, but I think it probably is a little bit further out or too esoteric for a lender, one of our MMBA members to have to worry too much about. So I do have some frequently asked questions, which are the things they do have to worry about. So we'll kind of knock out some of these that we know have come in from our members from the audience. So you mentioned price a little bit, obviously everybody being price sensitive, how it hits your P&L. And so I just wanted to summarize and find out if there's any other tiers we should be talking about. So the summary is you can go with the lowest cost lead bucket, but you better be ready because you're going to be up against national digital dialers. And so even though it doesn't cost you as much upfront for a pilot, you might find out you're less happy with that pilot because you're getting beat by people who have been doing this for years and years and years and are integrated. Two, we've got the sort of mid funnel long form that's like the wraparound services and sounds like a little bit of a heavier lift, and it's being bought by people who can provide more than just a mortgage application a solution. And then third, the post consult where you've talked to them, you've warmed them up, and now we have a warm transfer in, and you can do different size pilots in each of those. Is there any product I missed that we should talk about or that I failed to mention?
Yeah, I mean those are sort of the core ones. More we've launched more recently like a true rate table, like if you went to Bankrate, and
Oh, right. Okay. Yep.
we have that, and we have a comparison table. So if you went to nerdwallet.com and looked at some of the sort of like embedded content that you see within there, there's sort of like a lender list of like, be like a article on, VA loans, and then in the center it'll be like, these three lenders are good at, X, Y, and Z, and you can then click on it and redirect to that lender's website. So we have those two. I would say like the one thing I'd sort of overlay with what you sent is like we built the post consult lead for what we thought was going to be a carrot for, more or less like your members or like people trying to get into
Yep.
the lead space. But even if you take the nation's biggest lead buyer in Rocket, and that is their highest performing lead that they buy from anyone, not just OwnUp.
Yep.
It's also the most expensive lead that they buy from OwnUp. But if you think about like Rocket's Rocket across all of affiliate will convert like sub 1% from lead to lock. Those leads convert at like 7.5 to 8.5 percent lead to
Hmm.
lock. So it's the thing that I've found to be most interesting is like within the purchase space, it really is profound to have like an unbiased third party in between consumers and lenders, where we've been in a refi market for, but before rates rose for what,
Yep.
15 years, when rates
Yeah.
are steadily going down, and having these refi pockets that have kept lenders afloat and happy and making money. But when you're in a purchase world, the empathy and trust and education that you can get from a third party just is crazy to see the sort of magnitude that can do to lift conversion, specifically within purchase.
Yeah.
So that's just sort of the last thing that I would overlay onto that.
Yeah. And then the other question that we have coming in would be around what types of data integrations, data acceptance, what types of things do I have to be ready for on my end to start piloting a lead gen program or upping my lead gen program? And how do you talk to lenders about that integration, that data partnership?
Yeah, so we do most of the integration for lenders. So the
Hmm.
really the only thing we ask for is give us like the posting URL, which is essentially like we collect information about a customer. We have 20 data entries. Where do we push that into your CRM? So we get sort of a posting URL, which is where we send all the string of information. And then we get your sort of mapping documentation to say, if we collect purchase price, what property do you want that in your CRM? So we'll do the mapping for you.
Okay.
When we send a lead through, it should auto map to the correct properties. Um, and then I think like from a lender's perspective, ensuring that your CRM and your LOS talk to one another,
Yep.
it's rudimentary, but
Okay.
happens less frequently than you'd think.
Sure.
Um, and just allows for lenders to get sort of smarter about their stuff. And candidly, a lot of um, our reporting is built off of like the date that a milestone was achieved that you typically can't get within a CRM house.
Yep. Okay. One of the trends that OwnUp does not participate in because it's a credit bureau trend. So it's really the credit reporting agencies and those types are those credit trigger leads. So for the audience, there is a lot of noise right now around credit triggers because at the federal level, the MBA is pushing a bill that would address that, that would actually limit the ability to sell and call on credit triggers, those leads once there's been a credit inquiry. But then I had another question for you, Will, separate from that, which was I had also heard there are changes coming around telemarketing in, I think this year. I'm not as familiar with it. And I was just wondering, other than credit triggers, are you hearing of any other changes that are coming to the lead gen world that lenders should be thinking about that are maybe on your radar?
Yeah. So trigger leads going away would be a net benefit to lead providers
Okay.
because there's a lot of people that badmouth trigger leads and then also buy them at
Yeah.
the same time.
Sure.
So it would unlock a lot of demand within the space.
Okay.
So that would be good for us. One sort of piece of that is we're now running the mortgage vertical for Experian.
Okay.
And
Yes. Congratulations on that, by the way, but that's a good note.
yeah,
Yeah, you're right.
like if credit triggers go away, like all of these all of these providers can still have that information and still can provide
That's
customer
right.
experiences that go beyond just selling customer data. So if you have credit trigger, there's nothing keeping a credit union or a TransUnion from putting a rate table in that consumer's account, and
Sure.
they'll monetize it instead of making
Still figure out a way to, yep.
to 250 people buying that same trigger. You'll sell it to one or two people and make 150 pop. Like they can
Yep.
they can likely go not too disturbed there. Um, so I think credit leads going away will be good, and I think it'll open up opportunities for lenders to get um, the same sort of like data pushes that they're used to getting within trigger leads um, from these providers that'll sort of safeguard them from the retention shops, the servicers who will still have access to trigger leads.
Hmm.
And then as it relates to telephony and sort of outreach, the like one-to-one consent was the big hot
Hmm.
topic within lead gen that was supposed to go in effect January 27th of this year. That got
Okay.
pushed and likely will get punted. But the whole premise around that was a consumer has to select a lender's logo for them to reach out to them and get explicit one-to-one consent. So if you go to
Hmm.
LendingTree, you opt in and give consent to their provider list, which is like 5,000 lenders long.
Yep.
So when you give them consent,
That's the trick.
technically
That's the trick to get the,
5,000
yep.
could reach out to them.
Yep.
In a one-to-one consent world, you'd show them, you'd get consent, but you'd have to say, you're giving me consent for Rocket Mortgage to reach out to you. And one-to-one, very customer-centric fashion.
Yep.
Um, and likely with the administration that we have today, that likely won't go into effect for maybe ever during
Yep.
this season.
Hmm.
Um, but I think they'll that would have, we did almost a year's worth of work to product experiences to get ready for that, and then in a drop of a hat they were like on the 26th or whatever it was, like,
Yeah.
we're not.
Never
um,
mind. Never mind.
but that would have been another thing that would have hurt the lead gen space pretty
Right.
greatly. But because we have a concierge team, we would have been uniquely positioned to work that, because we get sort of like consent for OwnUp
Hmm.
to talk to you, consent for a lender to talk to you. So like if you didn't opt into any lenders, we could still call you.
Yep.
But yeah, there's that was really like the big one. But for better or worse, got punted.
Great. And then the last question, kind of from the frequently asked questions bucket, was just kind of, I teased it at the outset, but we'll make sure we spend a minute here on it, which is the rest of the organization, compliance, operations, closing. You guys mentioned how well you do working with your lenders, measuring things like lock, funding, and those types of things, which means you have visibility into like how it goes and how fast it goes and how these things perform. What else does a lender thinking about this? What else does compliance need to think about? What else does ops need to think about, if anything? How is it different than any other lead, or is it not? Once it's in at 10:03, we're in and we're off and running. Talk us through that a little bit.
Yeah, so I would say like the big pieces are marketing, understanding like the customer journey. Like buying leads is not sort of like one and the same, and we create we force lenders to have like multiple endpoints so that they can create sort of custom journeys by type. So like what you would push to an accepted offer customer is greatly different than someone who's in the sort of like discovery phase,
Mm-hmm.
which is also greatly different from someone that spent 15 minutes with one of our home advisors and already loosely knows that they qualify. So like making sure that marketing or whoever's in charge of like CRM blasts, email marketing that goes out, et cetera, is important as sort of one bucket of it. The other thing that I think is important, depending on the type of lead that you're working, is like um, understanding the sort of like margins needed to win. So like
Oh yeah.
what would win accepted offer business is totally different from what would win sort of mid funnel
Mm-hmm.
business, um, which is also different from refi. And sort of thinking about like, applying, having different margins for different funnels is something that a lot of lenders will do, that obviously captures part of sort of cap markets. And then also could dictate sort of like sales comp. So like
Mm-hmm.
if you have an LO working accept offer leads that are going to convert from lead to lock in 6 days, you're probably going to pay them a hell of a lot less than you're going to pay someone that's been working lead for 6 months. And the margin associated with it is different. So we have people that will run, vastly different sort of sales comp structures by journey. So there's a lot of customization that you can do, but I think the most important thing is understanding the customer journey so that you know what your next step is, especially when you're starting small, and then sort of like ensuring that each time you add a different product, that there's some level of understanding of sort of what's next.
Well, those are some great takeaways. for those still watching, thank you. One of the things I wanted to mention at the outset, but remembered to mention before the end, is that OwnUp is based in our backyard. So a Massachusetts-born company with roots in Boston, in the region. I'm also going to be asking Will and OwnUp if they'll come down to Newport for the New England Mortgage Bankers Conference so we can talk more about this stuff, perhaps on stage, perhaps doing demos for you. That's coming up in September, so we'll talk more about that. But this is a technology partner that I think you've heard during this hour that this is a quickly evolving space with a lot of innovation, a lot of tech challenges, and really trying to help lenders win. And so we want to keep our eyes on this specifically from the innovation tech perspective, but then just as an industry, this is helping Massachusetts-based lenders compete against national lenders as well. And so we want to think more about that. So Will, thanks for joining us on Tech Tuesdays, and we're looking forward to staying in touch with OwnUp.
Absolutely. Thanks for having me, and hopefully you guys found it interesting.
For sure. A lot of good takeaways, and we'll definitely have you back. Appreciate your time today.
Take care, guys.
Thank you. Thanks, everybody. Talk to you again soon.